Hello dear traders, last week was rather volatile given the geopolitical situation. Russia's decision to recognize and then enter the separatist regions in Ukraine caused a market panic. Judging by the developments of events, geopolitical tensions are likely to persist for a long time. The risk of the US stock market's crash remains high despite the current moderate recovery. Watch our video review and leave your comments below. Investors sought shelter in safe haven assets last week amid geopolitical headwinds and uncertainty. Columns of Russian troops and tanks are now located in many Ukrainian regions. Missile strikes take place every day, as well as airstrikes on facilities. A huge number of refugees are gathering now at the EU border. More than 100,000 Ukrainians have already fled to Poland. People in large cities are forced to hide in the subway stations from the expected military assault. Western countries imposed tough sanctions against Russia. For instance, they limited Russia's central bank's access to its assets and operations with the largest countries. Additionally, they blocked Russia's access to the SWIFT international banking payment system. The US introduced individual sanctions on Russian President Vladimir Putin and Foreign Minister Sergei Lavrov and other high-ranking officials. The stock market remained quite buoyant despite geopolitical turbulence. The Dow Jones was perhaps the only key stock index that logged weekly losses. It dropped by 100 points or 0.3%. The forecast for the week is neutral. The Dow Jones is expected to move in the range of 33,500 to 34,500 points. Other stock indices ended the week in the black. The S&P 500 gained 40 pips or 1%. Analysts expect the index to trade in the range of 4,300 to 4,500 points. The forecast is also quite modest. The US economy remains strong. Therefore, there has been a strong correction in the market. To this end, stocks may even resume an upward movement. However, the ongoing war may undermine their growth. Now it's pointless to make forecasts on the developments of events in Ukraine. Although on Monday the parties agreed to return to the negotiation table, the first round of talks did not bring any results. This is why analysts anticipate the second round. Yet they do not expect major changes. Meanwhile, Russian troops began storming Kherson without waiting for the second round of negotiations. Ukraine is still in control of all major cities, including Kiev. The NASDAQ composite also managed to rise by 250 points or 1.7% despite the market panic. Analysts assume that the index is likely to stay in the range of 13,300 to 14,300 points, which roughly corresponds to the levels of the 1st of March. Traders keep close tabs on the headlines. The news is changing rapidly. If the situation does not aggravate further, Wall Street may stabilize. In general, the beginning of March will be challenging for investors. It's necessary to adapt to the new realities. Investors are worried about the risks of a slowdown in the global economy and the consequences for the stock market. The Ukrainian crisis will certainly boost global inflation. The Fed still sticks to hawkish rhetoric, yet it should also factor in the Russia-Ukraine conflict. Only 2 countries are now involved in the war, but other countries are concerned about their security. This is why central banks may take a cautious approach due to market uncertainty. This week, the Bank of Canada will hold a scheduled meeting on Wednesday. Jerome Powell will address Congress on the same day. Traders will finally find out how policymakers assess the impact of the Russian-Ukrainian conflict. That's all for now. Please subscribe to our channel and keep abreast of the latest market news. Your feedback is important to us as we work for you. See you back soon.